Alright guys, I will be teaching you today how to trade support and the resistance the right way. Trading support and resistance the right way. There are basically several ways to trade support and resistance. I want to point out that just because you saw price coming to a support does not mean that you will buy. Why? Because support and resistance can always break. They may always be stop hunt. So today's class is making the most out of support and resistance. That is a market stroke. Show 105. Okay, market structure 105. Making the most out of support and resistance. That's the topic for today. That's the topic. Now, I want to point out some facts that, number one, there are several facts you should know about this. Number one, support slash resistance zone always break. That's the first thing you should know. The second thing you should know is that support, you should know that support slash resistance zones are not lines, but zones. They are not straight lines. If you draw a straight line, you get a lot of false break and all of that. And the third thing you should know about this is that S arrow zones can false breaks. Yeah, these are the three important things you need to know. That support and resistance zones can always break. They are not lines but zones. Support and resistance zones can give false breaks. So when you know these three things, you will not be in a hurry to just enter in support. Maybe you see the market, you see price coming down. You know that this is a support because you have seen this. You've seen something like this. Something like a support around here, somewhere around there. This is a 4 hours support and resistance zone. Okay, now you also, because price was coming down, you just buy immediately. There's a possibility that this place can break. So it's not advisable that you should just enter a buy because you see price approaching this place, you saw rejections here, and then you just buy like that. No, it's really not wise. It's really not wise. Okay. There are certain things you should look out for to make the most out of support and resistance zones. The first thing you should look out for is to look out for the trend. These are the things you should look out for to make the most out of this. You look out for the trend of the market. Is it a buy trend? Is there a reversal pattern? Okay. First, you look out for the trend or pattern. All right. So we're looking at for the trend. Is it a buy trend? Is it a bullish trend? Okay, look at this now. We saw that the markets formed something like a low here, formed a double bottom here, formed a new lower higher low, went up. This is a bullish trend because markets made a high, made a low, did something like a double bottom here, formed a new low, went high. So we established that this was a bullish trend. So we want to know the trend of the market first. This was a bullish trend, and we saw what happened. The market came down to form, as you can see, saw these rejections 1, 2, 3, 4, and these are 4-hour candles. Markets could not break here for 1, 2, 3, 4, 5 for about 20 hours. You didn't need a prophet to tell that this was going to buy because the market acts like a tennis ball. If you cannot break a level, it's going to go to the next level. So we saw this. This was a very good buy opportunity. We saw these rejections here. So first of all, you look out for the trend of the market. Then you look out for the pattern. Is it a double bottom? Is it a flag pattern? What pattern is it showing? Like in this case, we saw what happened there. This was some kind of double double bottom. We saw something like this. Though there was a stop hunt there. But look what I was telling you. Imagine you took your buy around there because of support. Maybe you took your buy because you saw this, and then you took your buy around there. You see that the markets would have stopped you out. Imagine because you saw these candles there, and you bought around there. Look at this. Look at this push down. You would have been stopped out. So this one I'm teaching you this. This was a kind of some kind of false break because if you draw this line, if you extend it here, look at this. Have you seen this? So many people would have bought thinking that the market will buy from there. But look at what the market did. It intentionally pushed all the way to this point. Look at how many pips. Imagine the kind of drawdown would have been if you try to hold this trade. So it took out buyers before buying. So it's not advisable to just buy because you see price coming to a support. You wait to see the second thing. The second thing you want to see is you want to see a reversal candlestick pattern. You want to see a reversal candlestick pattern. That's number two. You want to see a reversal candlestick pattern. So you want to see, if you want to become conservative, you want to see a reversal candlestick pattern at the support or at the resistance. You want to see something like rejection, something like this. You want to see a bullish engulfing. You want to see a bearish engulfing. You want to see a Haramai candle. You want to see a pin bar, several pin bars, a convincing pin bar. Not you want to see a sharp doji. Okay. Like for instance, I saw something like this. The market was trying to retrace. We can say that this was some kind of level. For those of you that like scalping, you have caught this trade on 1 hour. If it's 1 hour, you would have caught this trade. Now, you see what the market did here. It came to test this zone. Look at here. Look at this sharp rejection. So this was a very clear buy continuation pattern. So if I saw this, I would have just taken my buy here. Then maybe my stops a bit below, but it would have been much though. Well, I wouldn't have taken this trade though, because of the stop loss will be so much. But if you have the equity, you can take your buy. Maybe you saw this candle close this way. This is a buy continuation candle. So that bought all the way to this point. Right? So you look out for a candlestick reversal pattern. Is it a candlestick reversal or continuation pattern? All right. A candlestick reversal or continuation pattern. It's basically the same thing. Just in reverse directions, right? So wait for a candlestick reversal or continuation pattern. For instance, you saw this market. Look at this market here. There was some kind of support around here. I can see this. I can see this. I can see this right here. Then if you extend it, there was some kind of zone around here. As you can see, you can see this. Or some kind of zone around there. Now, market broke here, and we can see this. This is look at this here. Market broke here and came to retest it. Look at this engulfing candle. This was a sharp bullish confirmation. You saw this engulfing candle. Look at this. First, we saw that price could not break here for 1, 2, 3, 12 hours. Then we saw this engulfing candle. This was a very clear buy signal to push this market up. So you look out for a reversal of continuation candlestick pattern. In this case, we saw the market break here convincingly. Then it came here. It gave what do you call it? This is a Haramai candle because it's open and closed inside the previous candle. So this was some kind of bullish candlestick pattern. If you saw it on 1 hour, you would have known better if you saw the 1 hour. So you wait for a candlestick continuation or a reversal pattern. And the third thing you should look out for to make the most out of support and resistance is your Fibonacci. Your Fibonacci levels. Number 3, your Fibonacci levels. You use the Fibonacci levels to make the most out of it. So I wouldn't be talking much about that because that will be in our premium class. It's in our beginner course. It's part of our beginner course. How to use this to catch sniper entries. I wouldn't really be talking about that much here because it's a very deep concept. It's a deep concept. I can't exhaust it here. So it's not a beginner's course. And a beginner's course goes for just $25. Let's go for $25. Get that in our beginner's course. it go for $25. All right, beginner's course goes for $25. But if you want the master course goes for $70. But if I did a kind of promo, if you want both of them, right, the master course goes for $70. But if you want boots, get boots at a discount price of $60. So instead of paying 25 and paying 20, 70, you can just get both of them at $60. So you're saving $35. You're saving $35 when you do this. You're saving $35. That's what you're saving. Instead of paying 25 and now paying 70 later on, just pay for both and get this capital of $60. So that is it. I wouldn't talk much about Fibonacci levels because of the concept is deep and it will help you get sniper entries. So you get that in our beginner course. Get that in our beginner's course. So the reason for beginner's course, just to register, just email me or hit the WhatsApp link below. Now, in the previous video, I said what I want to be studying in our beginner's course. A lot of stuff, a lot of interesting stuff that many people would not want to tell you how to catch sniper entries and all of that. So this will be part of our beginner's course. If you want it, just email me or hit the WhatsApp link. So as I was saying, make sure your Fibonacci level lines up with that resistance. So you draw a Fibonacci tool. Let me just do a little thing on that. But I wouldn't be going so deep in that. All right. Now this is my Fibonacci tool. Okay. I wouldn't be going much into the details of that. But I didn't even do it the way I should do it. Let me format it. All right, 61.8, 78.6, and this. Okay. All right. Now, I saw price buying, so I extend my Fibonacci tool from the swing low to the swing. This was a kind of swing high. We'll just take the body of the candle. Let's take the body. Okay. We saw what happened. That no, let me take the week. Since I'm taking the week, let's take the week. All right. We saw that the market came and bought and see where it tapped on our 50. Say it tapped on our 50. Look at this, our 50. Market tapped it there. So I wouldn't be talking much about this. It's just a prelude. So market tapped at the 50 and then shut up after that. I wouldn't talk much about this. If you want to learn more, just pay for our beginner's course. I just want to give an idea of that. Now, the next thing you should look out for when you're trading support and resistance, you should look out for the momentum of the market. The momentum of the market, not just the trend, the momentum of the markets. For instance, look at what happened there. Look at this. This was some kind of support, but look at what happened there. Price could not break this resistance for 1 to about 20 hours. I didn't need an angel to tell me that it was going to break this zone. This zone was very close to this point. So you look at the distance from year to year, and I saw the market was coming. Look at the first bearish candle, second bearish candle, third bearish candle. I knew that this was going to break because of the momentum. Price could not break here. So it was coming down with a very heavy momentum. So the only thing that could hold price was a kind of support that was kind of far away. This kind of close zone would have been taken out. All right. So when you see the markets coming with a heavy momentum, just don't buy at a support that is close to it because it is likely going to break it. All right. All right. So that is that about that. Okay. For now, looking at this market, we have seen that price have tried to break here. It could not go up for. It has tried to go up. It could not. Look at how many candles have been trying to break upwards. This one could not break. This one could not break. This one could not break. So most likely, price is going to break this support and come down to somewhere around here. So even if you want to buy this assets, if you're looking to buy it around there, somewhere around there, because the market is going to go, it's going to break this point here. It's going to break it, even if it's not now. Maybe later on, it's going to maybe go up a bit and still take out this place because there's liquidity there. I'm talking about liquidity in our master course. I won't be talking about that here, but um, look at this. So this is a likely zone market is going to sell to. Look at it could not buy up for how many hours. Look at these rejections. It's going to most likely come down to this point or this point here. So the market is going to sell down to. Okay. Now, for market to sell down to this, okay. This is the recent higher low because market didn't form a high here. This is not a high. So this is a higher high, but it has not formed a higher low yet. So most likely the price is going to drop down to this point before buying more. There's no break of structure yet because there is no new higher low. Look at this point did not form a high. It's just some kind of rejection. So most likely this candle is going to sell down to this point before buying because of this rejection. So you need to gather momentum to buy up. So it's going to most likely come down here to this area or this area. So those are the three basic things you should know about support and resistance. You look out for the trend, look out for the reversal or concession candlestick pattern, you look out for the Fibonacci. Okay, let me add one last one. Okay, you look out for number 4. Look out for demand or supply zones. And number 5, I think you look out for to take your buy as a support because not every support is a good support. Look out for supply or demand zones. You look out for, I wouldn't be going into details in this video. That's almost telling what to look out for. In the next video, I may try to use this checklist to give us what to look out for. You look out for other blocks. And number 6, you look out for institutional candles slash smart money. So look out for institutional candles or smart money play. So these are the other things that you should look out for when taking your buys or the support or sales at the resistance. Look out for the trend, you look out for the reversal pattern, you look out for the Fibonacci level. Does it line up? You look out for the demand or supply zones. These are zones. The demand zone is a zone where buyers are most. This is a demand zone because it pushed price all the way up. So know that I buy orders here. This is a demand zone. This is a demand zone because look at after this point, look at the heavy push upwards. So this is a demand zone. This is a demand zone as well. You can see how the price came here. So this is a demand zone as well. Why supply zones are where you have heavy sell. This is supply zone. Markets came here. Look at this heavy fall. So this is supply zone. It's a place where there are much other buyers or sellers. Then the other blocks are the other block is almost the same thing. It's the last count before the opposite move. Look at market was selling. This is the other block here. It's almost the same thing with supply or demand zone. This is the other block. This is the last bearish candle before this heavy push. This is another block. This candle here is another block. It's the last bearish candle before this heavy push. This is a other block, the bearish other block is the last candle before this heavy push. So, and another thing you should look out for is the institutional candle smart money play. You'll be getting that in our master course. So I wouldn't be talking about that here because of the concept. It's a deep concept. It's not something I can exhaust online. It's not something that is needed for everyone to know. So just make sure you email me or hit the WhatsApp link below to get the details of this. It's now a master course. It's now a master course. So you can just hit me up on my email or hit the WhatsApp link below and just register. So these are the things you should look out for. So in our next video, we're talking about this is our next video. We're talking about taking trades with support slash resistance. So this is in our next video. We're putting everything we have covered here together. We're putting all this into play. Okay. I may not really go deep into all this premium. I may not go deep into Fibonacci. I may not go deep into institutional candle. I may not go deep into other blocks, but I will try to use the trend, the reversal pattern, and the demand and supply zones to give us the very good tutorship on taking trades with support and resistance zone. That will be market structure 105, sorry, 106. So make sure you subscribe to our channel, and hit the like button if you haven't subscribed to our channel so to get the updates. I might not be posting this I'll be posting this in a while, it may take a little time so I can put up some things together. So make sure you subscribe, and like this video. All right, make sure you subscribe and like this video. So if you're really interested in our beginners course, just make sure you email me or hit the WhatsApp link below. It goes for as low as $25. Very cheap and affordable. We'll teach you how to analyze the market like this, how to take your trades, and all of that. Why in our master course, we'll be teaching you Fibonacci, how to make sniper entries to Fibonacci levels, how to maximize these three things: demand, supply, other blocks, institutional candles, how they make sniper entries, and profitable patterns in the market. Patterns that you look out for are very profitable. We'll teach you how to trade institution, how to trade like the banks, that is smart money. We'll teach you smart money play. We'll teach you patterns, yes, like some other patterns, flag pattern, all those things, how to make the best out of it. Okay, we will teach you all those things in our master course, and you will have access to a 1 year mentorship. You can ask questions, we'll analyze trades together, and all those things that will help you to profitable. You earn as you learn. Even from the first week of your registration, I can bet you that you will start making money. I'm telling you that some of my trades I take trades that give me as much as $40 a trade, or sometimes $8 a trade. So it's not really about the money. $25 is not even up to what I make some days in a trade. Some days I make up close to $200 or thereabouts in a trade, in a day, sorry. So it's just to help us to make it affordable. Many people charge more than this, but I just try to make it $25 for our beginner course so that it will be affordable for everyone. If you're a beginner or you don't know how to analyze the market, or you need someone to just hold your hands and teach you. So just make sure you email me. Okay, email me at electronglobal@gmail.com. Just email me at electronglobal@gmail.com, or hit the WhatsApp link below. All right, so that will be all for now. Cheers and God bless.